Hello, good afternoon, everybody. Of course, I'm not totally set up. Yeah, I hope you don't mind, if I keep my T-shirt, my glasses on, and we're still officially in summer. I'd like to enjoy it as long as possible. There is the dog roaming around. I hope she'll be quiet. Usually, she also happens. So let's try to say hello. You want to say hello to? Oops! Come, you're too big, too fat. Come on. Say hello. Come. She doesn't like it. She likes to be pet, but she doesn't like when I hold her. And she's too big anyway. So I hope you had a nice last weekend. Last week was filled with quite a few events. Obviously, the main point was the Jackson Hole, Powell Jackson Hole speech. That basically confirmed what was everyone was expecting for interest rate cuts. Now we are waiting for September. But basically, that's the idea behind, what I'm showing here is that basically Jay Powell is delivering what the market is expecting. This is what's been happening since 2009. Every time the market was expecting something, the Fed delivered. Because after the 2008 great financial crisis, the Fed didn't want to take the risk to crash the market again, specifically in the context of QE infinity. And well, they delivered, and specifically, in a year like this one, it's an election year. I don't think that the Fed is willing to take the risk of crashing the market, specifically now. So let's start, I guess. After this little and quick introduction, I hope everyone is here. Let me set up my stuff, because obviously I'm always a little bit disorganized. This is still not really, I'm not totally, let's say, fluent with that with that platform, as you can see. But anyways, I hope I give you some a little bit of information. I hope you also had the time to check the newsletter. We'll cover most of the things that I've said in the newsletter, plus a couple of things. Again, if you have a comment, question, don't hesitate to ask. I know basically very few comments, very few questions every week. But I still see that people are coming and joining for the show, so that's why I'm still doing it, because that's an exercise that I'm doing anyway for myself. So let's start. Maybe what time is it? 5:03. I guess people that wanted to join live are here. The other ones, there's a few that I know that always watch it later on the replay, either on LinkedIn Live or on the YouTube channel. So we'll start, like you say in English, without further ado. Let's start. Okay, so we'll start with geopolitics as usual, and Ukraine. You've seen well, there was a lot of talk recently about the incursion of the Ukrainian force into Russia in the Kursk region. Again, like I said last week, it's not clear what was the intention, because there was no strategy, in my opinion, no strategical or tactical objective. And the results now seems to be unfolding that way, meaning that Ukraine is not making any more progress in the Kursk region. They seem to be retracting, I would say, and they are losing ground on the eastern region much faster than they were before they started attacking Kursk. So basically, why did they try to do this? They are in my opinion, two possibilities, as you can see on the on the political article. Ukraine wants peace talk in the wake of Russian incursion. So when you go to the table of negotiations, obviously you want to be in a situation of power, of strength, to be able to negotiate, which before Ukraine was not in position to do. I'm not sure that. Well, I don't think that it will work, because first, the Kursk region was not defended at all by Russia. It was a mistake by Russia. They never thought that Ukraine would actually try to enter the Russian territory and mostly defend the eastern region. So that's how they managed to very rapidly and quickly enter that oblast of Kursk. But now, the situation is settled. They are not making any progress, and Putin has vowed to eliminate the Ukraine regime at this point, which is kind of worse. So Ukraine wanted peace talk, but not directly with Putin, and Putin is very unlikely to have peace talks anyway now at this point. And as you see, on the map here, Russia has started to retaliate by striking Ukraine with drones, with missiles all over the country. So basically, Russia doesn't seem to be in a position where they will agree to negotiate anything actually with Ukraine. And before that, before Russia started to strike massively Ukraine, like this week and today, the U.S. embassy, as you can see, had sent a message to U.S. citizens in Ukraine asking them to leave very rapidly. So basically, the U.S. knew that Russia, would respond very rapidly after that, and pretty heavily as well. And on top of that, so that was the first option, was to be able to negotiate in a position of strength. It seems to have not worked. The other option that I thought about was to provoke, to poke the Russian bear, to force them to retaliate massively and to engage into an escalation that would justify a direct maybe engagement of the US potentially. So it's not happening at this point. And the US has agreed to send more HIMARS weapons to Ukraine to be able to hit Russia inside its territory. So again, that's another bigger escalation. I don't know where it will go. I have my opinion that I will give you after speaking about the Middle East. What can we say about that? Yes, I mean, one last thing about Ukraine. You've seen the developments about Nord Stream 2, where it's now admitted by all parties that Nord Stream 2 was blown up by the Ukrainians themselves, probably with the help of the US. If you remember what Biden had said, Nord Stream 2 will not happen. You can be sure about that. So Ukraine's admitted that's Ukraine that did it, probably with the help of the US. They have built a funny story about a kind of a drunken sailor team blowing up the pipeline. That doesn't make sense at all. But what's more important is that the Ukrainian government was aware of this and kind of supported this, whoever did this, either them directly or not directly. And obviously this pissed off Germany, because Germany was heavily dependent on the Russian gas for its industry, and this has generated dissensions within the European NATO countries, because, for instance, the Czech prime minister declared that the Nord Stream 2 pipeline was a legitimate target for Ukrainian to hit, and Germany considering the consequences it has on its industry, obviously disagrees and says that this is a criminal act. And if you've seen, Germany has started taking some steps back in support of Ukraine. So we'll see where that goes. But Ukraine seems to be in a more difficult position now after the attack in Kursk, and now that it's been kind of admitted by all parties that it was a Ukrainian team that blew up Nord Stream 2, seem to be in a worse position than they were before. And if a peace negotiation would happen now, they would have basically very little leverage to negotiate. But I don't expect any negotiation of peace to happen at this point. So in the Middle East now, so it's basically more of the same. You've seen, so last week, even continuing to this weekend, so Israel has struck South Lebanon to kill one guy, I don't remember the name, a leader of the Hezbollah, Fouad Shukar, in the South Lebanon. So they've hit South Lebanon pretty massively. And so obviously the Hezbollah responded again with a heavy barrage of rockets, drones, all that kind of stuff that blocked the aerial traffic in Israel for quite some time, specifically in Tel Aviv. I'm not sure it's resumed yet at this point. So it's still going on. Iran, I say Iran because obviously Hezbollah is a proxy of Iran, and that's basically what the Israel government is saying. Hezbollah hitting Israel is the same thing as Iran hitting Israel, which kind of makes sense, right? So that's where we are now. It's another escalation because now Israel wants to retaliate not only against hitting Hezbollah in South Lebanon, but trying to push the US to help them hitting Iran directly, which again would be another massive escalation. So both in Ukraine and the Middle East, we are on the brink of falling on the side of larger, bigger war. We are not there yet, but we are very close. If you want what I think about that, what I think is the following: is that I believe that nothing will happen, at least from the Russia, Iran, China side before the US election. Why? Because they probably want to see whether it will be Trump that will be elected or Harris elected for the next administration. And I think that they believe that if Trump is elected, there is a better chance for peace. I also agree with that, with some price to be paid for that peace. Probably Ukraine will never recover the eastern region of the country. Middle East is a little bit tricky because obviously Israel is not in the position of Ukraine. They can they can act by themselves without kind of the authorization of the US. So it will be very difficult much more difficult to settle a peace in the Middle East. But probably the Ukraine part would be kind of fixed somehow, again at a cost for Ukraine. There would be some things to do with Ukraine, but obviously Trump represents a better chance to find way to have some peace agreements. Now, the other position, the other option is the opposite, which, so I think that if the Harris administration is put into office in November, I believe that means that World War III would be inevitable, and then Russia will attack Ukraine massively, much more than it did so far. Probably there is always the option of a limited nuclear strike in Ukraine, which, as a reminder, this would be only the second time after the US did it in Japan that it would be used. So I believe that if Harris is getting elected, we are going to World War III. And if you take the Russian Iranian position, then you would have to do it as soon as possible. So I believe this is why we won't see a major escalation into a global conflict before the election, unless obviously if NATO and the US trigger it by themselves. But now, if NATO and the US are triggering by themselves, this is another problem, because they would have to get the support of the population. And so that's why most of the war that has been started have been specifically, from the US. You can look it up. Have been started after a false flag, because the false flag allows to gain the support of the population. If you start attacking yourself without being attacked, it's specifically in the West, it's much more difficult to sell it to the population and get its support. So basically, that's what I think. The other important thing last week was the DNC convention, where Kamala Harris was anointed, I would say, as the Democratic Party candidate for the election. A couple of things interested is that even the New York Times admitted that Biden was ousted by an internal coup that put in place Kamala Harris. Funny part, is that in the same article, the columnist that wrote this article said that yes, it was a coup, not very democratic, but it was the right thing to do. So you can fight for democracy and take some liberties for democracy as well. That's pretty fine. That seems to be what goes on on the left. The other interesting thing is that, to add insult to injury, I don't know if you noticed, but Biden's speech was relegated very late in the night, after, I've noted here, 11:28 p.m. Really, usually a time when he's actually sleeping. And as far as I know, Kamala Harris was not even here to listen to the speech, which is kind of incredible. Other funny part, just the policies that were discussed. Well, I would say that there were very few policies discussed at the DNC convention. Most of the time was spent going after Trump. I think that he was mentioned. So the number I have in mind, so don't quote me in this, but he was mentioned 147 times. The first day only, when at the Republican convention, Biden was only mentioned 2 times for the whole convention. So basically, the only program that the Democrat Party has is basically, we just want to get rid of Trump, and the rest will figure itself out somehow. So the big news that kind of crashed the honeymoon after the DNC, that as soon as the DNC basically was kind of nearly over, you had Robert Kennedy Jr. announcing that he was joining Trump, and exactly for this, to save democracy, because what we've seen over the last 4 years is that we have a reduction in freedom of speech. We had censorship. We had war. Basically, everything that the left had promised that would happen under Trump, basically they implemented it, which is obviously ironic. And the other main reason, I believe that, he mentioned it, but I think the last trigger that made RFK join Trump is when the Democrat Party refused to discuss with him and started suing him to removing him from the ballot in certain states to not to suffer from the split of the voice from the Democrats that would vote for Robert Kennedy. And just to I don't know if you've seen it, but they started suing so Kennedy to remove it from the ballot, but they also did the same with Jill Stein, the candidate for the Green Party. I mean, the Green Party is not gathering a lot of votes, obviously, but when you've seen what happened on the last election, the margins were so narrow that even one single third party candidate can swing one state to another. So they both sued, and they both sued Kennedy and Jill Stein, but obviously they were pissed off about that. Who wouldn't be? What else can we say about this? Do I have something else, or we switch to the economy? Yeah, maybe I could add this. Something I've seen maybe this weekend is that it's a little bit in between geopolitics and economy, that the US federal debt is now spiraling in total out of control. This is something that we've mentioned many times, but the estimation for the future basically are revised every day because it's spiraling more exponentially than linearly. So they have an institute that calculated that by 2054 the net interest costs for the debt are projected to hit 6.3% of GDP, which will be about 3 times the defense spending. So that's basically insane, and every tax dollar that you will pay, well, let's forget about it. It's just insane at this point, and this will lead to probably a collapse. Anyway, there's no way you can go to in my opinion, 2054 in that kind of situation without experiencing the consequences. So. Economy now. So the big news last week on the economy side. Maybe I should. Can I remove myself? What if I do this? No, that was not the idea. Anyway, let's try this. Maybe I can do that. Yes, just for you to show. We've talked about this many times in the Croissant Files, the newsletter and the live, that the data was totally fake. Was totally fake. They were promoting jobs creation to make the headline of the news, to push the narrative that the Biden administration was doing an amazing work. However, this is not exactly what happened, as you can see, because every time there was job creation announcement, the next month or the next quarter, there was even not greater revision, but showing that that basically the job market was not what it was advertised. And so last week, the Fed, they had to admit it in the last big revision that nearly 1 million of jobs, I think that the real number was 18,000 jobs basically were fake. They actually never happened. They never existed. And the funny part, I mean, if you want to make the link with the with the DNC convention is when the commerce secretary, what's her name, Gina Raimondo's last week was interviewed about this during the DNC convention when they announced the revision. She said, "I don't believe whatever says come Trump." And the funny part is what the host told her, "Well, it's coming from the your Bureau of Labor Statistics," and she just answered, "I'm not aware of that." So that was kind of, I mean, really funny and sad to have that kind of leader in power at this time. But the Bureau of Labor Statistics, I mean, whether it's on the left side, on the short side, on the right side, sorry, has always been used anyway um, to push some, propaganda narrative by manipulating the data, distorting definitions, and at the end of the day, push the narrative that they wanted to push. That's usually what happens. So after that, we had the FOMC minute. If you remember. What can I play with this? Yeah, if you want to see me, if you don't want to see me, I don't know. Yeah, so first was coming the FOMC minutes last Wednesday. It was actually just a setup for Powell's speech on Friday in Jackson Hole. So basically, they didn't really mention anything serious. The focus was not there, and again, they didn't want to crash Jay Powell's speech. So what did the guy say? So I think that I've noted, the most. So inflation has declined significantly, like we've seen the number with kind of heavily massaged numbers. You just remove what you don't want to see in the numbers, and then you can take them down. So he said that the inflation has declined significantly, but more importantly, I think the biggest part is the two sentences that he said, that the time has come for policy to adjust and the direction of travel is clear. So obviously what the market understood with these two sentences is that, okay, we are cutting interest rates. It's done, it's in the books. We don't know exactly how much we'll be doing, but count on me, we be cutting rates. So that will be very interesting to see at a point where the inflation officially is still about, I don't have the number in mind, but the last one I had in mind is 2.8. So at a point where inflation is that level and they are already considering cutting rates, this means basically that the 2% target inflation is actually not a target anymore, but is more a floor of what they expect. And the risk obviously is for them to start triggering another wave of inflation, basically just like what happened in the 70s. Everyone is sharing this comparison between the 70s and now with first wave inflation and then the Fed starting cut and triggering another wave inflation. This is, I mean, if you ask, in my opinion, this is what is most likely to happen, but they are doing this facing a recession at this point, probably global recession. So it's, I mean, they just have to, trying to evolve within the corners they have set for themselves between a recession and inflation, which is usually defined as stagflation. Okay, so what's next? I'm just checking in my notes rapidly. But I think that's what had to be reminded about the Jackson Hole speech, not much more than that, because we've seen that, the economy is not a driver for the market. The only thing that matters is the interest rates in the US, and the interest rate differential, if you take into account the carry trade, for instance. But Japan interest rate seems to be a bigger factor at this on that side. So you've seen that the cut of the odds, probably the cuts of cutting 25 bips, sorry, have risen to 78%. So that's basically in the books. A cut by 50 bips has risen to 23%. It's only a quarter of it, but again, like I said before at the beginning of this show, is that since 2009, the Fed has delivered what they had promised, or what the market was expecting, because the risk of crashing the market is basically too big at this point. So I'm really convinced that now, even this time, it's not different. They won't take the risk of crashing the market. What else? I think that's about it in terms of economy, because basically that was the event of last week, and again, that's interest rates are the main driver of the market. Interest rates expectation, what the Fed will do. The market wants to have free money, basically. So when you saw this, what was the market reaction? Obviously, last week we had the rebound. Let me put that a little bit bigger. So we had started the rebound of the markets when the BOJ caved after the big drop at the beginning of August due to the carry trade, and when the BOJ said that they would not rise, they do not foresee more interest rate hikes in the near future. Obviously, the market came back, and this was carry trade on. So this week was the price action was still good. The market was still going up last week, specifically on the confirmation by Powell last Friday. So today was kind of a little bit of a correction, not much. But what I think what's interesting is that here you have the three markets, three major equity markets in the US. You have this S&P 500, which is top left. You have the Nasdaq, which is top right, and you have the Dow Jones Industrial Average on the bottom. So you've seen that basically today the Dow Jones Industrial Average made a new high. Actually, I mean, I don't think it held that new high, but it's much closer to the new highs. The S&P 500 is hovering around the new highs, when you can see that the tech has not recovered totally like the two other indices. This is interesting. This shows basically a slight divergence between all the equity indices. As a reminder, there are the Nvidia earnings on Wednesday, if I remember well. And when you have, like we've seen before, we've talked about the Mac 7 going Mac 6, Mac 5, Mac 4, Mac 3, Mac 3, Mac 1, basically, which is Nvidia. So basically, the market is hanging by one single thread, that is Nvidia at this point. And so if the earnings are coming very different from what they are expected to be by the markets, we might have a significant market reaction, specifically for the tech sector. So that will be interesting to see. So it makes sense to have a little bit of volatility coming until Wednesday, and see what happens. Probably if the I would say that you see we are in the corner here on the VIX, which is the black chart. I'll come back to the white one after that. But we are kind of in a corner where you could go back to the bottom of the channel, a triangle or flag, whatever you want to call it, for the VIX, or you could explode on the upside if potentially the earnings are not what they are expected. But you've seen that, you can see that basically the volatility, even after the volatility crush, we are rising slightly again. And probably, nervosity due to the Nvidia earnings, and the fact also that nothing is sold, nothing is fixed, and the Fed interest rates cut is not fixing anything, is just kicking the can forward, basically. So I want to go back on to this chart, the white chart in the middle, which is again the VIX, how it happened at the beginning of August, which shows that the VIX spike was was pretty violent at this point, at this time, but at the same time, the VIX crush was as violent as basically the spike, which never happens actually, because when you have fear in the market, it takes some time for market participants to gain trust again about the current market situation. And here is just like, oh, we made a mistake. It's not worth the VIX should not be there. We're going back where we were. Kind of this. It was, I wanted to come back to this, show this chart, because this is very, very unusual in terms of volatility dynamic. Really large, big spike and a collapse, volatility crush so fast. It's definitely one of a kind. So it's very interesting. I won't bother you much more with that. So I see that you still don't have any question, guys, but that's fine. I will stop asking for questions, I guess. What else? What is it? So yes, that's the bonds, the long-term bonds. You see that basically long-term bonds are positively oriented since basically the end of November last year, since the Fed basically pivoted at this time. We are still in a good, let's say, how do you say that? In a good dynamic, basically on the bonds. However, the expectation of rates cuts did not really trigger a massive rush into bonds. I think there are other dynamics between that, just because if this triggers another round of inflation, this will the bonds will be probably put under pressure again. So I think there's contradicting dynamic that plays into the bond market, and at the same time, probably let's say the credit worthiness, if you can say that, of the US bonds is not as what it used to be either, just because of the debt. And there's a point that basically if you start printing the debt, printing money to pay the debt, this is a technical default. So you can say it's not, but it would be. So what else? So we have the bonds here. Again, I'm just putting my my little ticker at the bottom, saying that everything that I say about the markets here is not investment advice. This is not made for you to make investment decisions or an indication of buying or selling any kind of security or whatever. This is for information only, and this is hopefully to help you make your own decisions. So here you have the crude oil. that rebounded pretty well last week, again within the same range. Like I said, for quite a few weeks right now, what's interesting is to see and check when oil will be breaking out of this flag to see where it goes. I think that this chart has to be put in relation with the US dollar, because if you put that in the context of a global recession, it doesn't really make sense to have the oil having a really big bull run. But at the same time, what I like to say, so we see the price of commodities in relation to the dollar. And it's the same as, to me, I like to see this as inflation, just like inflation. Very often I say that inflation is no, not like this. Grocery price. The price of groceries are what they are. They are not more expensive. The issue is that the money that you are paying your grocery with, or whatever else that is impacted by inflation, the money that you pay these things with is less, so you have to give more. And I believe that it's more the impact of the US dollar, maybe, with the crude oil, that led the crude oil to regain some steam, because basically the US dollar not really collapsed, but weakened pretty significantly over the last week or 2 weeks. Similarly, dollar weakening, you have Bitcoin no, not Bitcoin, but that's the same thing basically. It's very similar. That's gold. The dollar going down, gold going up, that makes again perfect sense, especially in the context of interest rates going down, and potentially, again, the debt and the creditworthiness of the U.S. Treasury being lower. Probably most investor would better want to hedge or take some risk off by stashing some value into gold rather than Treasury at this time. The Fed seems to be kind of lost anyway. Again, not an investment advice, just a personal reflection. But this is where we seem to go. And I think the last chart is what it is. Yes, this is the US, so the dollar index, basically the dollar against a basket of other currencies. And you've seen that the last weeks or even 2 weeks, it's been weakening, breaking a support. This has to be seen, because if it has to be seen, it has to be checked, monitored, I would say, because if the dollar is continue to depreciate, it might be better for exportation, but there are other consequences on the price potentially of commodities going up. There's a lot of things. Probably can also push gold on the upside. Obviously, this is a direct consequence of Powell saying that he will cut interest rates at some point. So this will be interesting. But I'd like to finish with a quick reminder that a quick reminder that. And it is something that I've shared in the post maybe this weekend, I think, but this is a post that I shared before on LinkedIn. If you look, and I don't have it, sorry, but you can go to my LinkedIn post and check. Now, over the last maybe 60 years, all the market crashed or bear market happened after the Fed pivoted. Meaning that when the Fed is deciding to reduce the interest rates, to support the market, this is when the market after that are actually crashing. And you think about, a little bit of, 2 cent psychology, that makes sense, because when the Fed has basically trained us to think that they are not leading, driving the markets. They are the backseat passengers, and they are reacting to what's happening, and very often very late, either on the interest rate hike cycles or the interest rate cut cycles, which means that when the Fed is deciding to reduce or to cut interest rates, this means that basically potentially something worse and worse situation is probably likely to develop further. So that's the case. That's my 2 cent explanation of why it might be the case, but this is something that has not been disproved over the last 6 years. Again, I really encourage you to go back to my post. You'll see the chart where you have the Fed, the times when the Fed starting pivoting and decreasing rates, and followed by a recession or a bear market after that. Another interesting thing that I've seen yesterday is that in 2007, when the Fed decided to cut, to do an emergency cut of interest rates, then the market after that basically dropped very, very significantly. So basically, yes, that's it for me today. What time is it? I was slightly shorter than usual, which is a good thing if you ask me. It's always lasts for an hour. Again, I have no questions, so I guess you don't care, or you do. I don't know, but it's not really important, because I always see that you are there. So LinkedIn shares some statistics as the one that is running the event. I get some statistics, so I see that people are viewing this. I see the number of people who are looking at it live, you have a lot of statistics. So I know that you are watching, even if you are not asking question, obviously, otherwise I would not do this anyway, and I would only do it for myself. So yeah, maybe I can tell you one last thing. I've not been really consistent with LinkedIn this summer. It was the summer, actually. But I plan to be more active once the summer is done. I plan to be more active again, so we'll go back to having this private Croissant files for accredited investor. I will go back to it. I'm thinking about doing something slightly different at this point, just to still make it fun. But I'll figure that out. So it probably will resume early September. I'll start again, like I said, to pick up on activity again on LinkedIn. Hopefully, I will be able to share some valuable content with you. I like the interaction that I have with you on LinkedIn. That's always fun. And more importantly for me, I'm learning a lot very often from your comments. I know that sometimes I can put some silly stuff and what I would define as not really totally informed comments on LinkedIn. But fortunately, you very often comment very nicely, correct me if I need to, and I learn a lot. And that's also one of the reasons I spend some time on LinkedIn. So thank you very much for this. Thank you very much for your following. Thank you very much for your time, for your comments, everything. And I hope you'll have the time, and you had the time to watch, to read the newsletter and to watch this. and it's time for me to go. So thank you very much, guys, and see you next week. Bye bye. Take care.